The Datavault AI Inc. stock, NASDAQ DVLT, is currently trading at $1.60, representing a significant intraday gain of $0.15 or roughly 10.76% today. This kind of volatility is the signature trait of this stock, but the current pop is fueled by something concrete and quite unexpected for a microcap name: a substantial raise in revenue guidance based on negotiations for the tokenization of trillions of dollars in real-world assets, or RWA. When most investors look at Datavault AI, the immediate expectation is a high-risk, low-float online investment play, a penny stock with erratic price action, likely driven by retail momentum and prone to dilution. They see the $1.60 price point and immediately think of a speculative gamble, maybe the kind of thing you might try on a Robinhood at for fractional shares, but certainly not a stable fixture in a conservative portfolio managed through Schwab Intelligent Portfolios or an individual brokerage like Fidelity. However, the deeper reality, the one we need to focus on, is the aggressive, potentially transformative business pivot the company has undertaken. The market narrative says meme stock. The business reality is that the company is aiming to be a key infrastructural layer in the emerging RWA tokenization space, a market where institutions, governments, and corporations are looking to digitize and monetize everything from precious metals to carbon credits. This isn't just a slight increase in sales. Datavault AI's management has recently updated its 2025 revenue guidance to a range of $30 million to $60 million, a massive leap from the $2.7 million reported in 2024, and has projected 2026 revenue to exceed $200 million. Let that sink in, a projected tenfold revenue increase from 2024 to 2026. This is the unexpected insight. The company is leveraging its intellectual property to move from a small-time technology provider to a potential gatekeeper in a multi-trillion-dollar digital asset class. It's a bold claim, and the stock's current daily swing, which is notably high in volume, is a direct, tangible reaction to this news, creating the tension between the small-cap stock expectation and the massive financial ambition reality. Drilling down into the recent stock movement, the daily swing of over 10% on significant volume, over 50 million shares traded today compared to an average of around 83 million, indicates heavy trading and a fight between short sellers and hopeful longs. Volatility is high, as evidenced by its 52-week range spanning from 25 cents to over $4.10. The stock has seen a sharp rally over the past month, which followed a period of extreme negativity, including a short report that the company formally rebutted, calling it false and defamatory. The recent surge isn't solely retail-driven this time, though retail certainly contributes to the outsized moves. Institutional activity, while still representing a small overall percentage of ownership, is showing significant new positions being opened by names like Vanguard Group and JP Morgan Chase in their recent 13F filings, though many of these are small initial allocations. The institutional activity is not a flood, but it is a consistent drip, which in a low-float stock can be a meaningful catalyst. This push-pull dynamic is why traders who rely on fast execution through platforms like Interactive Brokers Trading or the convenience of the SoFi Invest platform are closely watching the daily charts. The price is reacting less to traditional earnings metrics, which are still struggling with negative margins and high operating expenses, a key point for the short thesis, and more to the prospect of future, high-margin licensing revenue tied to this RWA tokenization opportunity. The sheer magnitude of the projected revenue, even if it's based on contracts in negotiation, is enough to overwhelm the recent memory of a troubling earnings report that showed a substantial net loss. Now, let's step back and establish common ground. Most investors who know Datavault AI view it as a tech company with a complex, diversified, and frankly, somewhat confusing business model. They know it's trying to make a name for itself in AI and data monetization, maybe something to do with audio technologies and spatial data, but the core business has been murky. They see the headline and think, this is just another AI-hyped microcap that won't last. That's the widespread expectation. The deeper, contrarian take that we need to challenge this with is that the company's complex structure might actually be a feature, not a bug in this emerging space. Datavault AI's intellectual property portfolio, encompassing patented technologies for data tokenization, credentialing, and AI-driven valuation, like its data value pricing engine, gives it a defensive moat that many pure-play crypto or AI firms lack. They aren't just building a digital ledger, they claim to have the patents necessary to monetize data objects securely, a critical piece of the puzzle for large entities like governments and established corporations that prioritize security and verifiable IP. The shift isn't just to AI, it's to patent-backed data and asset monetization, a much more specific and potentially valuable vertical. This reframing forces a rethink. The high leverage and significant long-term debt, which looks like a red flag to many, may be the necessary fuel for an aggressive land grab in this new lucrative market, provided those high-value contracts close.